Corporate finance practice problem using Excel. Convertible bond price and conversion value. Get ready, it's time to take our chance with corporate finance. We are in our Excel worksheet. If you have access to the Excel worksheet, would like to follow along, note that we're in one of two practice tabs as opposed to one of two example tabs. The example tabs in essence being the answer key. We have the information on the left-hand side. Going to populate that into the blue area on the right-hand side, looking at our bonds with the convertible bonds. Information including the bonds with a conversion premium of, so we have the conversion premium of the 39, something we calculated in the prior presentation. We have the conversion price of 23, something once again we calculated in the prior presentation. And then we have the common stock of the common stock price, market price for the common stock if we were to convert the bonds to the stock. The common price is the $20 currently trading for. The par value of the bonds, not the market price, but par value 1,000. We're going to first look at the conversion ratio. So in the prior presentation, we looked at the conversion ratio if given to figure out, we looked at the conversion ratio to figure out the conversion price. Now we're going to look at the conversion price to figure out the conversion ratio. Remember that these things are, of course, related. So if you understand the algebra or math for one, you don't want to think of them as separate in your mind. You want to just do the algebra and be able to see them together. Plug in to the unknown if you know the formula for one and not the other, for example, for the conversion price, but not the conversion ratio. So we're going to be comparing, remember, the par value here, not the market price of the bond, but the par value of the bond. That's going to be the 1,000. And then the conversion price, which is going to be the 23. And that's going to give us then our conversion ratio. So the conversion ratio is going to be equal to the 1,000 divided by the 23, or 43. So that means we could be converting the bond into the 43 stocks. So we get 43 stocks for the bond. We're going to go up to the font group, underline that. We can then take a look at the conversion value. The conversion value being the conversion ratio, meaning the number of stocks we can convert the bonds into. And this is the conversion value if we converted the bonds into the stock, and compare that to the common stock price, multiply times the common stock price, what the stocks are currently trading for. So in other words, if we can convert the bonds to 43 shares at a current value of the shares trading for 20, multiplying that out, that's going to give us our conversion value equal to 43 times the 20, or the 870. Now we'll take a look at the bond price. So the bond price, we've got the conversion value of the 870. That's what we can convert for. And we have the conversion premium, which is given here in this problem. We took a look at the calculation of the conversion premium. And the prior problem, it's given here at the 23. So the conversion value plus the conversion premium is going to give us the 870 plus the 39 being the bond price. Okay, let's do it again. We're going to go to the practice problem number 2. Practice problem number 2, where we have similar kind of layout here with the bonds with a conversion premium of the 65, conversion price 28, common stock price 23, and the par value at the 1,000. So we're going to run this back. We got the conversion ratio that we'll be calculating, which will give us we're going to be picking up the par value. Remember, we're taking into consideration the par value, not the market price of the bonds here. That's going to be the 1,000, and the conversion price being the 28. Going to then go up top, font group, underline, and that'll give us our conversion ratio. Conversion ratio, which is going to be equal to the 1,000 divided by the 36. So that means we can be purchasing with the bonds. We can convert, in other words, we convert the bond to 36 shares of stock. So that's going to be the conversion, and then we can figure out the conversion value. The conversion value is the conversion ratio that we calculated up top, because that's the number of shares that we can convert to, and times that multiplied by the common stock price. So in other words, if we could take that bond, convert it to 36 shares, which is currently trading for, having a market price then of 23, font group and underline. That'll give us our conversion value, the value if converted, which would be equal to the 36 times the 23, or $821. So then we can take a look at the bond price then, which should be the conversion value, meaning the value of the stock, and compare that or add that with the conversion premium, the conversion premium being the amount over and above for the market value above the conversion value. And so we calculate that in a prior presentation. It's given here at the 65. We're going to say font group and underline. That'll give us then our bond price. Bond price. And that's going to be equal to the 821 and the 65. So once again, you kind of want to be able to go back and forth if you were given an unknown here for the bond, calculating the bond price, if they ask you to calculate the conversion premium and give you the other unknowns, so you can kind of look at the relationship if you're given a book problem or in practice and you need to basically, back into whatever the unknown with it is with these formulas. You don't want to be thinking of them all as separate kind of formulas in your mind that have their own little place, but instead connected together and how they are related.